Okay, so we're going to get started today. Those of you who don't know me, my name is Josh Berger. I am a managing director at Norman Bobrow and Company, where we represent tenants for their office space in New York City and the outer boroughs. We also represent some retail tenants and some manufacturing clients, but the bulk of our business relates to office space tenants in Manhattan. I do lead a team of about 5 brokers. I also run the broker development program at the firm, as well as the internship program. And I've been representing companies in Manhattan for their real estate for over 11 years. And so I'm trying to provide as much perspective as I can for those in situations that are a little bit challenging now, given the new environment. Before I get started, I just want to thank all the trusted advisors in my sphere for all of their help and the perspectives that they've shared with me and continue to share with me. I think we're now seeing all how powerful our communities are in terms of supporting each other. And it's really a wonderful opportunity, I think, for everyone to lean on each other and on each other's expertise and see how we can really add value in a situation like this. So to give you a little perspective, I'll be going through a handful of slides, and then I will open it up to questions. I'm sure everyone has specific questions that they'd like to ask. If you do have a question, type it in the chat area, and I'll check on that once we get to that portion of the program. So let's get started. Basically, what I'm going to be doing is going through some client experiences during this process of COVID-19. It's obviously an unprecedented time, and I just wanted to give some context as to what some of my other clients are experiencing during this time, just to make everyone feel that we're not alone in this. Everyone's going through it together, and obviously it affects everyone in different ways. But I'm going to go through some specific examples of how it's happening for let's call it 7 or 8 clients. One company is a business applications engineer. They focus on building technology for different types of businesses. They were going through a little bit of a tough financial time before this began, and so what we did with them is let me go back one sec. And so what we did with them is we were actually in the midst of negotiating a lease termination. And so we are continuing with that lease termination and surrender with a small penalty. We're going to be moving them to a much smaller space where they can actually continue to work remotely. Now, most clients are not in this position because they were in financial health beforehand, and this is kind of a continuation. And so that's a little bit of what's going on with that client. What's going on with another client, they're software engineers, and they actually happen to be a subtenant of the business applications engineers. And so they are doing very well in terms of their finances, and they actually also have a lot of government contracts. So it's absolutely critical that they're up and running and that they're getting things going and having office space to work out of. And again, it's a very tough situation because we're not really allowed to go into buildings and show spaces. So in that situation, I was actually able to find them another shared space within their building. I have a good rapport with the agent of the building, and we were able to put them in a shared space to temporarily alleviate their concern for the next 12 or 24 months to make sure they're into their space and able to operate. Now, for most people, this isn't the case. For most people, unless you have a lease expiration that's right around the corner, we're kind of sitting tight and seeing how it plays out. But these are two examples of things where I was actually being active and getting some things done. The next one is a law firm that I'm currently working with. They're a past client, and they're in great financial standing. And as I'm recommending to all my clients who can, pay your rent in full. And he actually pays his rent in advance. But it's been interesting to see how this is playing out from a workflow standpoint in terms of how people can operate with less space working remotely. In this particular environment, we were actually discussing them taking about 15 or 20% less office space for the next lease, given that their younger workforce prefers to work remotely for a portion of the time. That does have its limitations, though, with this particular situation, because this law firm partners senior and junior attorneys. And so if they're not together, they tend to have a much more difficult time going back and forth and supporting each other and supporting the firm and the clients. So during the planning phase, we were already doing a space utilization strategy analysis. And over there, we found that they could use a little bit less space. The law firm was planning on expanding to another floor in the building to take a second floor. In this particular scenario, we're now refocusing on just renewing the lease on the one floor due to the uncertainty. Could we add the other floor later on in the negotiation? Absolutely. But what we're trying to do right now is stay focused on keeping the cash flow in the business and not taking on additional liability, if at all possible. The next example that I'm going to talk about is a school. This is a unique situation where the school has over 45 locations internationally. This happens to be a very proactive CEO who actually furloughed his entire staff about a week and a half ago in order to keep as much cash in the business as possible and still be able to pay the medical benefits. That's the case with a lot of the larger organizations that I'm working with who are very reliant on having people come in and pay tuition or pay as they go. And with experiences not happening like that, and with landlords, we're not landlords, but the government really saying we can't be in those areas, it's really weighing on people. So he's still paying his April rent to try and do the best that he can and show the landlord that he's doing the best that he can. But he needs some reprieve. He's looking to a lot of the government programs to alleviate this burden. And as things progress, we'll see those details come out. We'll touch on the CARES Act a little bit later on in the webinar. Another client that I'm working with or that I have been working with, and I'm consulting with right now, is an accounting firm. They've actually been moving towards a partial remote working plan as it is, and this is certainly going to expedite that process. And he is very, very obviously given the circumstances, but he's still saying they're unsure if clients are going to pay their bills. They're unsure if people have, personal or business tax returns and they have interruption in cash flow, if they can even afford to pay their bills in full. So again, he has his issues. They still have some paperwork in the office that they have to get to and access. But by and large, his workflow remains unchanged. In this particular scenario, when we negotiated the lease, we actually put an option to terminate in his lease. And so that's actually coming up in about 6 or 8 months where he has to give his notice. So this could be an opportunity to really readjust his strategy and alleviate some obligation. So just a couple more examples here. Another one is an outsourced accounting firm. And this is an accounting firm that is pretty well set up to work remotely. But the challenge here is that her firm focuses specifically on nonprofits. I'm sure that a number of you on this call either run a nonprofit or are on a board of a nonprofit or contribute to nonprofits. And we all know that, if people are really concerned about the money coming in, the money doesn't come out as easily. And so she's concerned that over the next few months, her clients, meaning the nonprofit organizations, are going to cut back on the services and or not be able to afford their bills. And right now I'm facilitating a conversation between her and her landlord. That's it's kind of a quasi between a family owner and a real estate investment trust. It's a family owner that does have other partners. And so we're seeing how that plays out. And I'll touch on the strategy over there a little bit later on the call. 2 more examples. One is a digital/experiential advertising firm. So everyone's looking and saying, "Oh my God, experiential advertising firm, they must be in trouble." So obviously all those events, a big event for her was South by Southwest. That entire event was canceled. But I was on the phone with her the other day, and she said to me that she's actually seen a huge uptick in her pitches for her digital work. A lot of tech companies and things like that are still very much going and working overtime actually. And so she's actually had more pitches in the last 2 years on the digital side than she's had in the last year combined. So it's just interesting to see how different firms are faring during this crisis.
Quick back, I just have a moment of webcam. Okay.
So the other example that I want to use here is regarding a private equity group. In this particular instance, they can certainly foresee business changing for them due to banks tightening their lending regulations. And really, banks' intention is to stay liquid as possible during this whole situation, which is going to play out over the next few months. And again, thankfully, they're running a good business. And my recommendation to them is paying your full rent on time as much as you can in order to maintain a positive relationship with the landlord. Because if push comes to shove down the line and we do need, well, as a tenant, we do need reprieve of the rent, we want to make sure that we have a best possible relationship with the landlord in that situation. In this particular deal also, we negotiated a termination option for her when we originally did. And so we might actually have an opportunity to, we'll call you a swap in the building and take her from a full floor about 17 or 18,000 square feet and put her on a partial floor about 11 or 12,000 feet. Again, she really understands how crucial having people in the offices in terms of collaboration, but also sees that there's an opportunity to reduce the space by about 20% in order to be more efficient from a financial standpoint. And especially as she said to me, For salespeople, she doesn't want them to have dedicated offices. She wants them out and pitching and with their clients and in front of them. So she's going to actually uh, pivot to having a rotating or hoteling desk situation where if you have 10 salespeople, there's five spots. And so they rotate in and out and they schedule when they're going to be in the office or not. So those are some of the experiences that my clients are having. Some see this as a lot of opportunity on the back end. Some of them, it's really going to have an impact. And, a number of my friends or clients have actually had to either let go of a bunch of employees or shut their doors. And so as all of you who run businesses understand, a lot of times, you have to make the hard decision and in order to keep the doors open. So now I'm going to talk about a little bit about what your options are in terms of paying your rent. Obviously, that's what everyone's here to hear about. And the first and most important thing that everybody needs to do is review your lease, have your real estate attorney review your lease to see what options you have and to see what your exposure is as a business and as a business owner. Some of the things that you really want to take a look at are, what are your late fee provisions? What is your default period? Do you have a period to cure your default? And if so, what is that period? Mind you, I will be sending out an email with a little cheat sheet with a lot of this information afterwards, so you don't have to worry about taking notes or anything like that. I got your back. The third and most important, or the fourth and most important part of this provision is, what is your personal liability as it relates to your good guy guarantee? 98% of leases in Manhattan have a good guy guarantee or a limited personal guarantee. And it's crucial to understand what your notice period is if you do intend to vacate your space, if there is a penalty or a fixed amount that is due as a business owner who's personally on the hook for this, after you return the space in broom clean condition. So these are extremely important things to understand in terms of what your liability is personally and as a business. And it's very important to have your real estate attorney review your lease and see what your rights are within that lease. So here are a couple of ideas that we've been floating by different landlords. And obviously each landlord is different, each situation is different. But one of the things that we're looking at is a temporary rent reduction. It's unrealistic to assume that a landlord is going to give you an extended rent abatement or an extended reduced rent over a long period. This is not a situation to renegotiate your lease. Mostly it's an opportunity to help get you through a certain period of time to help weather the storm and then get back to normal. Temporary rent holiday, right? That's to say, the first thing is to say, hey, Mr. and Mrs. Landlord, I can pay you 50% of my rent. This one is saying that maybe you're in a business that's completely reliant on seasonal income or completely reliant on tourism, for example. And so to say that, hey, Mr. and Mrs. Landlord, I need a temporary rent holiday for 2 or 3 months and then we can address it then. A lot of these times, it's not really that they're forgiving the rent. A lot of times they'll try and tack it on the back end or say, hey, I'll give you relief for the next 6 months, but then we're going to have to pay it off within the next year and amortize those costs. Leads into the next part, which is deferred rent. First of all, we're still very early on, and any business that really couldn't pay their March or April rent was probably in a tough position from a cash standpoint anyways. Landlords are not in the position where they can be deferring rent, forgiving rent, because they just simply have too many expenses as they run a building. They still have to pay their building staff. They still have to pay their executive staff. They have insurance costs. They have utilities. They have mortgages, right? So landlords are not in a position to simply be forgiving rent. I think it's important to consider that most of the rent that you're talking about, where you will have a temporary reprieve, it will be sent back to the back end. And we'll still have to wait to see where things come out from the CARES Act and see what landlords might be given by the government. Meaning, if they got, let's say, $1 million tax break on their taxes that are exempt for the year, it's a significant possibility that we have more flexibility in passing those savings along. But now we haven't seen that yet, so I think we all need to work with the information that we have on hand. And that's the next thing that I wanted to talk about, which is the CARES Act, right? The visibility isn't there yet. So you need to stay in touch with your trusted advisors, including your attorney, your broker, your business bankers, and anybody who's plugged in to see how this thing is going to play out. By and large, it does seem that there won't be much relief directly related to the rent. It seems as though the government right now is providing businesses a lot of money or portions of money or potential loans or grants, and they can do what they want with the money. My gut is telling me that this is going to go towards the cash flow of the business as it relates to employees. And I do think that we're not going to see, at least in the foreseeable future, something coming down from the government as it relates directly to commercial rents that tenants are paying. There is talk about redefining forced,
Very
which is, I think, something that people have seen in their lease as it relates to insurance provisions and certain other things. And there's talk about redefining force majeure to include the coronavirus, specifically as it relates to business interruption insurance. Insurance companies are certainly best set up with the infrastructure in terms of looking at claims, handling claims, assessing realities. And that is something that we should keep an eye out for, as to whether or not force majeure is going to be including coronavirus in the situation. So that's a little bit about the CARES Act. And again, the questions that you should ask yourself when you're thinking about your rent: did you pay March's rent? Are you going to be paying April's rent? When was the last time you were late on your rent? How often are you late paying your rent? These are all situations that are going to significantly impact how a landlord will interact with you. If you've been in a building for 15 years and never had a late payment in rent, chances are the landlord will have more flexibility. If you're somebody that's running on a shoestring budget and you're late every month on your rent, chances are the landlord won't have very much flexibility. But again, understand, landlords do not want tenants going out of business. A landlord would rather you be late on your rent than you go out of business. If you go out of business, then the landlord has to start all over again and has no income. So it's very important to understand that as an element to your decision as well. Now I'll go through a little bit about what I'm seeing with landlords. So I'm finding that most landlords, as I mentioned earlier, do have significant mortgages on their buildings, and as well as other expenses, and that they really rely on the rent from their tenants to meet their mortgage obligations. And this is why, obviously not 100% of your rent is going towards the mortgage, but that's why in a lot of circumstances with my clients, and again, everything is a case-by-case basis, but with a lot of my clients, I'm telling them, if you can't afford your full rent, at least pay a portion of the rent. And explain to the landlord why you're paying that portion of rent, and how it's going to help you continue to make your payroll and continue to keep your open. But again, we have to always have the understanding that the landlord has financial obligations themselves when it comes to these types of things. Also understand that landlords that have levered their buildings more will be less flexible on the rent, right? And so if you're a landlord and you have a huge mortgage on your building, you obviously have your back against the wall with the flexibility that you're able to. Now I want to talk about, on a high level, let's say a REIT versus a family owner structure. So a REIT, for those of you who don't know, is a real estate investment trust. These are the publicly traded companies that own real estate. REITs have been getting hammered in recent weeks. And ironically, REITs tend to trade at a little bit of a discount to the actual value of the real estate, which is an interesting concept. But these are public companies. These are companies that have shareholders, and they can't just decide to write things off and just say, "Hey, I'll give you relief. I won't give you that relief." And so those companies have a very, very little flexibility in terms of their ability to reduce the rent, even temporarily. And so you're going to find, if you're a tenant in a Vornado building, in an SL Green building, in a Brookfield building, and you're not a retail tenant, that's the caveat. These landlords are having much more flexibility when it comes to retail tenants and trying to help them, weather the storm. But if you're in a building like that and you're a commercial office tenant, it's very unlikely that you're going to get any reprieve, especially for the next 2 or 3 months, until we see how things play out from the government standpoint and from the funding standpoint. Now, when we talk about private or family-owned buildings, there's an important delineation there as well. This is a building that is wholly owned by one family, or do they have partners? Who are their partners? If you're dealing with an organization that has 7 million square feet in Manhattan and they own it all themselves and they have very low leverage on their buildings, obviously that's an opportunity. If you're a tenant and you've demonstrated that to that landlord, you might have more flexibility there. And with those owners, I'm finding them say, pay us what you can, explain to us why you're doing that, and we'll have a conversation or a discussion a little bit later on down the line to see how we're going to address things there. But the family owners that have major partners in terms of the financial institutions or things like that, pension funds and things like that, it's going to be very challenging for them to have that flexibility as well. Again, this is very much a case-by-case basis, which is why I'm recommending to everyone to look at your situation, look inside. How often have you had a conversation with your landlord? Are you a good tenant? Do you cause issues? Do you pay your rent on time? These are all qualitative things that are very important in understanding what flexibility you might have with your landlord. Um, so that's a little bit on REIT versus private structure and what I'm experiencing in the market. Um, when you are doing that, it's very important to understand that you have to be ready to explain to the landlord and document to the landlord direct financial impact that COVID-19 has already had on your business, the direct financial impact that it could have on a short-term basis, or the direct financial impact that it could have on a long-term basis. Without data and documentation that can back up what you're saying to the landlord, a lot of times they won't have very much flexibility. Now, I do think a lot of these conversations will not be happening in the next 2 or 3 weeks. A lot of them will be happening within the next 2 or 3 months, as landlords parse through the data and the government information that comes through. And also, don't forget that most tenants are reaching out to their landlords for relief, and so they simply have to be able to work through everything and see how things progress. So those are very important things to consider when approaching your landlord about any of these rent situations. So again, I'm going to go over the key points that we touched on. Review your lease and consult with your real estate attorney. It's really important from a legal perspective to understand what leverage you have, if any, and to understand what your obligations are. What are your late fee provisions? What is your default period? What is your personal liability as it relates to a good guy guarantee? What is the notice period? Do you owe a penalty or a fixed amount once you vacate the premises in room and condition? Are you on the hook for full performance under the lease, just the rent, or somewhere in between? These are very technical matters. It's very important that you speak to a real estate attorney and have your real estate attorney review the lease to understand flexibility and options you have. Number two is extremely important. You want to communicate effectively with your landlord, right? You cannot take the approach of, I'm in trouble, so I'm going to be aggressive against the landlord. I'm going to try and get as much as I can, as quickly as I can, and I'm going to be aggressive with it. The landlords are in a position themselves as well. And so we need to understand that we need to take compassion of their situation into account in order to affect the best results for ourselves. Now, obviously, we're all going through what we're going through, but it's important to be able to put a little bit of distance from an emotional standpoint between what you're feeling in your business and how you're approaching your landlord in order to get the best result. And that's why a lot of my clients are using me as a conduit or a go-between with them and their landlords, because they feel that they just get too emotional with it and they might snap or they might say something that could put them in a negative position. Again, be empathetic, be understanding. You want to communicate in writing, but you want to make sure that what you're writing is empathetic and takes into account the fact that the landlord does have a building staff, does have executive staff, they have taxes, they have utilities, they have a mortgage, right? So it's extremely important to understand that. Number two, when you pay your whole rent or portion of your rent or ask for any rent holiday, it's crucial to state the following in the email. Number one, that you clearly state the reasons that justify your position and try to explain it and have the data and documentation to back that up. Number two is that you reserve your rights under any future laws / bills that are passed for a rent abatement, deferral, or refund. This is very important. This has come from a number of my friends and colleagues who are real estate attorneys. If you want to do the right thing and pay your rent or pay a portion of the rent, that's great, and that's really the way to go about it. But reserve the rights. And now again, it's still ambiguous as to how this is going to play out, but make sure to reserve your rights under the law so that a landlord can't turn around and say, hey, you paid me the rent of $45,000 this month. You didn't say anything about wanting to get it back or potentially wanting to get it back. So it's very important to do that. And the third thing is prepare documentation that clearly illustrates the existing financial impact that COVID has had on your business, the potential short-term impact, as well as the potential long-term impact, right? And so if you can't really document that or show that to a landlord, you will have a lot less leverage as to what they're gonna have flexibility on, because they're gonna say, hey, this guy or gal might be trying to get one over on me and trying to get as much money as they can out of the situation. So the third thing that's really important to do is stay on top of the CARES Act. We really don't have clarity yet as to the details and the timing of the funds being released by the government, what that process is like, when it begins. So we're seeing some things, but we don't have visibility yet as to how these things are going to play out. And I think we're going to see a lot of these things play out this week. And so, I'll touch base with an email to everyone, basically weekly, letting everyone know what the updates are. But the crucial part is you have to understand and stay in touch with your advisors and your trusted advisors as to how these things are going to be playing out. Now, again, I'll mention again, there is nothing in the CARES Act that relates directly to commercial rent being paid by tenants. The government is kind of clumping it all together in the SBA loans and the other types of loans that are available, loans and grants. And so it's very important that, in my opinion, I don't see the government giving specific relief for commercial rent anytime in the future. Again, just one man's opinion, but I don't believe we're going to be seeing that. And so you need to look about how you're going to, I'm sure most of you have already applied for these loans or in process. You need to look at about how you're going to divide up those monies. And because I really don't think we're going to see much reprieve from the government as it relates to commercial rent tenants. The third thing that we need to keep in mind when it relates to the CARES Act is insurance, right? Most of you have business interruption insurance, but it doesn't really, they're saying right now that it doesn't fall, that COVID-19 does not fall within the realm of this force majeure. So Remedy, the Real Estate Board of New York, has offered some guidance that even though insurers are resisting claims for business interruption insurance, you should really consider notifying them of notifying the insurance companies of business losses associated with the COVID-19 environment and situation, including but not limited to business interruption and contingent business insurance, general liability insurance, as well as directors and officers insurance. So these are a few things that I think are really important to keep in mind when it comes to the CARE Act. I will be sending out a little cheat sheet that includes these key points. The last thing that I really wanted to touch on before taking any questions is really feel free to use me as a resource. I've been lucky enough to really surround myself with really good people in my career and in Manhattan, whether it comes to a real estate attorney. And obviously different attorneys are good for different situations. If you're looking for somebody who needs to talk to an accountant, or if you're an accountant and you want to see how you can help other businesses. If you are talking to a business banker, you want somebody to give you guidance, or you need some different guidance other than your existing relationship as it relates to the CARES Act and other things. Mortgage professional. Some people, whether it's personal, business, at this point, I see myself as a resource to my clients and my friends, commercial, residential, whatever it might be, I'm here to help. If you guys have technology issues, or you want to switch to a remote environment and you're having issues with that, I have a number of friends who run businesses. Specifically, I have one in mind right now who's on the call, who can certainly help with those IT needs, right? And so please don't feel embarrassed or anything other than complete openness to reach out and use me as a resource. So that's what I wanted to share with everyone today. Here's a little bit of my contact information if anybody does want to reach out. And now I'm going to look at the message board to see if we have any questions. Bear with me. I'm just going to stop the screen share right now and see what questions we have, if any. Okay. So the questions that we have here. Okay. Okay. So this is from an outsourced CFO, Brian Califano. He says, "Hi Josh, thanks for arranging this. I have a client who is seeking to downsize their space and want to defer their rent payment this month until they are able to secure a smaller footprint in the building. Should we look to defer this month's rent and then discuss subleasing options, or should we package them at the same time?" I would recommend to your client that if at all possible to pay the rent or the entire rent for this month. It will certainly put you in the best positions to negotiate that downsizing. I don't foresee a landlord saying no to the downsize, but I would think that if it's possible for your client to pay a rent or a significant portion of the rent, it would put him or her in a much better position to negotiate moving forward. Okay. Now we have another question that came from a client that said, "Hi Josh, one of our employees went to the office on Friday to pick up the mail. Several client payments were expected in the mail. There was no mail. The landlord had closed the building and USPS was not able to deliver the mail. What recourse do we have to get the landlord to give us access to the building to USPS?" This is actually the first time that I've heard this. Most landlords are keeping their buildings open even though tenants are not allowed to be there. And this is something that I would really recommend speaking to a real estate attorney about. In the short term, I would say maybe reach out to USPS and see if you can have your mail forwarded to the personal address of you, the CFO or the CEO, so that you can just kind of get things rolling as quickly as possible. The other option would be to, again, I guess go pick up the mail, but that doesn't really seem like an option given the current, quarantine situation. Even though it's not a real quarantine, I'd recommend reaching out to the post office to see if they can redirect the mail. That would be my recommendation on that front. The next question I have up here is from an accountant friend of mine. Says, can you trust your landlord if he responds orally to you? So this is a great question, and I think it really depends on the circumstance. I've had a couple of landlords who have given me their word that they've absolutely kept it. But what I would recommend to clients is if you have a conversation with the owner and they have it over the phone, follow it up with an email. Don't be aggressive about it. Don't, say, you said this and I said that, but say, hey, recapping our conversation, I'd like to confirm that we're all on the same page about X, Y, and Z. Please confirm, right? I'm more than happy to help talk people through different language that could be helpful in approaching a landlord respectfully, and with understanding. But I think anything that a landlord commits to orally, it's very important to get a follow-up in writing. The next question we have here is, do you think we can apply for the economic disaster loan now and still qualify for the CARES Act loan later? So that's a really great question. From my understanding, certain loans will preclude you from applying for the CARES Act. So each provision is very, very specific. I would recommend speaking to either your business banker or your attorney, your business attorney, or your real estate attorney, because they'll have a much more. I mean, we can connect offline also. I do have a very specific breakdown on who qualifies for what and how, and what things might preclude you from certain grants or loans. So, Michael, you can feel free to reach out to me privately, and we can have a conversation about that. Two other things that we're going to talk, two other questions that we're going to address. One is, are you suggesting we send an email to the landlord regarding future laws, etc., even if we are paying rent in full now? Yes, that is exactly what I'm recommending. All of my friends and colleagues who are attorneys have been very, very specific in saying that if you're paying your rent in full or even a portion, make sure to put a note along with that rent payment that says we reserve our rights under the law. If something does come down, you want to make sure that you have at least something to say, hey, Mr. and Mrs. Landlord, or hey, X, Y, and Z judge or court. We pay to try and be good people, but we're trying to, we're still entitled to what we deserve as it relates to legislation that's coming down. So that I would certainly suggest putting that in email. And again, I will be sending out a cheat sheet that will have some language that specifies how you can write that I got from a friend of mine who's an attorney. And again, I'm also more than happy to put you in touch with these attorneys that might be right for your situation. Next comment is, you mentioned some specific language in your request to adjust the amount of rent. So again, you can be very specific in what you're asking for, and the recommendation that I'm giving all my clients is look inward, look what you can afford. Make sure the most important thing is that you can pay your employees and keep your doors open, right? Don't put yourself in a position where you can't pay anything else because you're paying your rent. But again, everything is very case specific and circumstantial. So I would recommend to reach out to me privately over email or on a phone call, and I can help talk you through based on the numbers that you're experiencing, based on your client retention, et cetera, on what a good percentage might be for your rent. Okay, last question we're going to touch on.
On toasted bagel with butter or margarine?
My client has a lease that ends tomorrow. Rent is paid through the.
Half of it.
Hold on.
Yeah.
If we can mute this real quick. Bear with me. Okay, I'm not finding the person who's not on mute. We'll continue. My client has a lease that ends tomorrow. Rent is paid through the end of the lease. We are unable to vacate due to mandate regarding non-essential work. Landlord wants us to sign obligating us to vacate within 7 days of the mandate being lifted. And if not, we pay for every day from April to the date we are actually able to vacate. In this environment with so much unknown, 7 days seems short. should we obligate ourselves to anything at this point? Seems like this would be a very gray area since the lease has ended. I would agree that 7 days does seem a little bit aggressive, but again, I would really look to the important thing is here, even if as a business you might have relief and you might not be obligated under it, you have to see what your good guy guarantee says. Because if your good guy guarantee states that no matter what happens, you're personally liable, we don't want you obligating yourself on a personal level. Again, I would be happy to hop on the phone with you to discuss specifics and loop in an attorney that might be able to give, case-specific recommendations. But again, it's very important to make sure that you're not committing to anything before speaking to your trusted advisors and your attorneys. Those are very, very important things to do because things are very, very case specific. And I have some landlords who have told me I'm not budging not an inch for my clients, for my tenants. I can't. I'm a real estate investment trust. To somebody saying, hey, I trust you. You've been a good tenant of mine for 15 years. Pay me what you can, and we'll sort out the rest later. Now, I want to be very clear. That's not them saying we're going to forgive your rent. That's them saying if you need temporary relief, we can provide that, but we will tack it onto the back end, or we will amortize it over a certain period of time. So those are things that I think are very important to address. I want to thank everybody for joining the call. I will be sending out that cheat sheet to everyone who would join the call, and hope to be able to talk anyone through any issues that they might have. And again, I want to reiterate, please feel free to use me as a resource. There are no commitments here. There's nothing other than helping each other, trying to get through this time. And so please feel free to reach out with any questions over the next week or so, or whenever it might be applicable. And I will be sending updates weekly as as we get more specific clarity that's regarding the CARES Act. So thanks everyone for joining, and good luck. Stay positive and stay healthy.
Thanks, Josh.
Pleasure, guys.
Thanks, Josh.
Pleasure.
Thank you, Josh.
Thank you, Josh. Really appreciate it. Great.
Sure.
Super.
Thanks,
Thank
guys.
you so much.
Thank
Appreciate
you,
it.
Josh.
My pleasure.